Well, hello and welcome to Trusts and Estates Weekly, one of the Way to Wow shows. I'm your host, Kevin Bemmel, and we're here every Tuesday at 10 a.m. Pacific, 1 p.m. Eastern Time. And I'm really excited today to have a guest on the show, Vonmarie Thomas. Vonmarie actually reached out to me, I think, a few months ago. And in addition to talking business, we've also developed a very nice friendship. I mean, that's always such a great part of the business world is the friendships that you make along the way. And uh, I don't want to sound like an old guy, but you can look at her, you can see Vonmarie is a young woman, extremely bright, extremely accomplished, and hails from one of my favorite cities, the Big Apple. So that's a plus too. Is when we meet, we get to talk about things New York. So we're going to talk today about accounting strategies with respect to trusts and estates. So for those of you tuning in who are doing so because you're in your own estate planning process, or you're considering your estate planning, I think you will find this particularly relevant. And for those of you who are tuning in because you're looking to build an adjunct to your current business by being involved with trusts and estates. So this will give you, I think, some insight into how you can do that. So Vonmarie's practice does not only entail trusts and estates. This is one of the specialties that she has, but her practice is, of course, broader than that, which I think is also important from an accountant when you're looking at estate planning. If it's just that sort of narrow focus, that's problematic. And before we started the show, I was mentioning to Vonmarie that one of the I think a lot of people consider estate planning to be a legal process. So you have to drop a will, well, you go to a lawyer. You have to drop a trust, you go to a lawyer. But the reality is estate planning is a financial process. It has legal aspects that are a part of it, of course, but the real crux of it is a financial process. And so I encourage you to get your accountant involved, or if you don't have an accountant, by all means, call Vonmarie. Her contact information will be in the show notes after the show posts. So, without further ado, Vonmarie, welcome to Trust and Estates Weekly. Thanks very much for coming on the show.
Thank you so much for having me, Kevin. And it's always great chatting with you. I love talking all things business, all things New York, food, champagne, brunch. Listen, we can cover a lot of topics here.
Exactly. So do start out by telling us just a little bit about your background so people can understand, who you are, kind of the scope of your practice, and the various professional involvements that you have.
Absolutely. So I am an advisor. I am a franchise owner of Breakaway Bookkeeping and Advising. And this franchise is based in Oregon, so the West Coast, but I'm on the East Coast, and a lot of my work is remote. So I'm happy to hop on a Zoom call to keep track of all your documents electronically, to meet with your teams of other accountants or CPAs or tax professionals, or your lawyers as well, to team up with them to provide the best service for what you're trying to do for your own goals. And something else, I guess, another detail about my background, I do have an audit background. I do come from banking and insurance and public accounting, and I studied it in college as well. So I've worked in it for publicly traded companies as well. So I do understand a lot of the reporting that has to go out to who and the repercussions and the types of reports and how to work your way through those different requests from the different parties, right? Because
Right.
there is different regulation for all of this, and it's important. Sometimes people don't realize they have an LLC. The LLC is owned by the trust or something like that. It's a normal occurrence to protect your assets, but the LLC needs bookkeeping, the trust needs bookkeeping. You might need your own bookkeeping. I know that a lot of bank apps allow you to see how you spent your money, but aside from that, how are you going to stand in terms of an audit, right? Do you have all the documentation around that to support you in the case of an audit? And that's where my work comes in terms of being I guess, the person you might not love, but you'll love me. But you might not love
I don't
the
know how
audit.
anyone could not love you, frankly. that, that's just not a possibility.
So that's the good thing is I make it super easy to understand, and we'll get through it. It'll be an easy process, fun. I'll set you up on the different software. I'll make sure you have your financial reports whenever you need them, whatever cadence you need them in, monthly, weekly, bi-monthly, annually. And I'm happy to talk to anyone around you as well to, make sure that you have what you need. And if there's something you don't understand, I'm also happy to break it down, happy to, take the fear out of it as well, because it seems to a lot of people daunting and heavy. And a lot of these matters deal with family as well. And that is also something that tugs at my heartstrings as well. Like, I'm very family oriented, and I'm always thinking about the people around me. So I I keep that in my work as well.
So, I want to take a minute to just highlight a couple of things that you said that I think are so important. One is you have a background in banking and insurance, right? So these are such important components of working on an estate plan, because both of them play into the heart of maintaining our wealth, passing our wealth along to our heirs. And the last thing that you mentioned just now about being aware of the people, right? When all is said and done, an estate plan, while it's a financial plan, in the end, it is about people, right? If we don't care about our heirs, our family, or whatever, then we don't really need to bother with an estate plan. So all the numbers and the insurance and everything that goes into it, in the end, that's just a means to an end, right?
Exactly. And also you can also sign charities up if you don't have direct heirs. You can assign charities to inherit your estate, your assets as well. So that's another thing you could possibly set up.
Mhm.
And I know a lot of people are also very much into helping out animals and protecting them as well. And there are plenty of charities that do that kind of work that would love to have the funds to be able to help more of them.
Right.
So it goes in any direction you might want it to go in. So, like, the biggest thing is about being clear about the end result and depicting that out. And obviously, once you're clear, working backwards with a team of people like Kevin, your fiduciary, right, in out of California, and people like myself, a CPA, a lawyer, that can help with all of that and create that reality.
So when you're working with, a client who they're doing their estate planning, or maybe they have a trust already, or that sort of thing, what do you see as being, let's say, the three most important issues that they need to focus on, or they need to consider? I mean, out of the range of, I mean, there's always, right, 1,000 things that we need to deal with, I think we need to sort of chunk them down so that we can keep our major focus on the most important ones. So from your perspective, involved in accounting and bookkeeping, what do you see as like I said, maybe the top three issues?
Okay, so the top three issues off the top of my head, one, the record keeping, two, the entity distribution between what is part of the trust, what's not part of the trust, what's part of your LLC that you might also own. So how to distinguish those things and break them out and account for them separately because they all need their own record keeping, and how to communicate that to your accountant. And then three is having a good team that communicates with each other is super important, which sometimes I've seen is happen, sometimes I've seen it not happen. And it makes a huge difference. And when you introduce your assistant to your accountant, to your lawyer, and everyone knows each other and knows what their roles are, and you're just better supported. Like you almost don't even have to think or be present. And if questions come in to that vicinity, that group of people, everyone knows what to look out for and how to communicate that to you. So you are covered from all angles. And I think those are the biggest things. But I think in the record keeping, a lot of people don't keep track of their receipts. And if they do, they live in they're in Gmail somewhere, or yeah, and they were never really allocated to the proper entity. Or maybe if you do have some kind of organization, maybe you have a credit card that is just for your business or just for your personal, and that's a great place to start. However, there's more to it. Like you'll want to have detailed reports, because at that point it's hard to argue, if you were in an audit, what the basis of that expense was for. And that's a lot of what my work entails, like being able to provide you with a paper trail, even though we're not using paper anymore. Everyone, not, we're done with the paper. Save the earth. um,
So,
but
so I'm curious to hear your thoughts about this. So I know for my own personal finances, I mean, I have my credit card that I use for personal expenses. I have a different one that I use for my business expenses, and I have a third one that I use for a rental property that I have, and in that way, um, from a credit card standpoint, right? All of those are separate, and then I keep a separate set of books, if you will, for each one
Mhm.
of those as well. So, would you say something like that is sufficient, or does it need to go, beyond that? How would we break that down?
I mean, if it's simple enough that it can be tracked on an Excel sheet or something like that, if if it doesn't if it's something that's trackable and manageable at that level, good job, I have to say, because some people don't, they commingle different business transactions with other ones, and then they might feel scatterbrained or scared when the IRS comes knocking. And then, so you want to be able to separate that out. So good job on doing that. Um, if it's past the level of being able to manage, like on an Excel sheet,
Mhm.
it's best to get an accountant, get a bookkeeper, or somebody else to be able to categorize the transactions that are occurring outside of the credit card, because you might be invoicing for a separate business. You might need that set up. You want to be able to track the income that came in through there as well, because then there are expenses that get applied directly to that income. And
Right.
you might want further analysis on that business as well. So outside of the trust space, that's what you should look at. But within the trust space, you want to keep track of your distributions, the interest that you've made on the different bank accounts or assets that you might have,
Mhm.
because those things get taxed under the trust. And you also want to be able to apply any legal expenses that you've spent on, or fiduciaries that you've paid, anything in relation to administering the trust.
Mhm.
You want to be able to report that. And so something else I didn't mention is that the work that I do, I know that that trust and estates, all those issues happen on a state by state basis. There are different laws around that, but the federal filing is federal and it covers all 50 states. Therefore, the accounting might not be different. It's not going to be different. Like, it goes to the IRS, it's federal. Like, the reporting that I would technically do is cookie cutter, depending on obviously like what assets are in there. If you have commercial real estate or residential, if it's making some kind of money, then you're going to want to account for it in a detailed way.
Mhm.
So
Okay, yeah. So for each one of those entities, it should have its own chart of accounts, income, expenses, and it should be um, easy to look at a financial statement then and determine, what was the income, what were the sources of the income, what were the expenses, to whom did they go, and then what's the bottom line, as well as generate potentially even a balance sheet for each of those entities as well. Is that correct?
yes, a balance sheet and a distribution report. So
Okay.
the way that I would account for it, I guess in accountant terms, it would go on the equity as like owner's draw or distributions.
Mm-hmm.
That's where I put it when I'm accounting for these things. I don't keep it on the income statement per se,
Mm-hmm.
because it doesn't mean the same thing. Like, the net income of the trust is the trust is net income. The
Mm-hmm.
distribution would flow through onto your personal tax return. So obviously, if you have questions and you need details on that, definitely reach out to a tax accountant that will get all the IRS details ironed out for you. But the work that I do will go to them, and I will be able to distinguish what happens where and kind of get ahead of all of the questions that your tax accountant might ask you,
Mm-hmm.
and you'll be better prepared that way. But the distributions do flow through to the regular 1040. It'll go from the 1041, any distributions get reported, and then the beneficiaries or the people that have obtained that cash or any benefits will pay taxes on it in their own tax bubble.
Right, right. Okay.
Mhm.
So and your second one was making sure that each entity has its own not just, I guess, not just its own set of records, but um again, like I have a separate bank account for my corporation. I have personal bank account. My daughter I have separate bank accounts for my daughter, right? Um, so, and yet at some point it seems to me there needs to be an aggregation, or not, or is it literally, are they all kept separate? So how do we deal with these sort of multiplicity of entities, making sure that in the end we can deal with them individually, but we also have the overall picture?
So there is a way for a person like myself to provide you with a consolidated income statement or consolidated financial reports. You can ask for that, or you can ask for the individual entity financial statements. So you might ask your account. I guess this is important. This is actually super important to communicate at the beginning of working with someone, because the amount of work it is to backtrack and split things up into the different entities can be cumbersome.
Mm-hmm.
However, it's possible. It's possible to do.
Mm-hmm.
But it's best if you going in know that, I guess you could probably follow the rule of knowing the different EIN numbers that apply to the different things you're working on, right? So your business is going to have its own EIN number, which is the whatever taxable entity identification number that the IRS is going to have for that entity.
Mm-hmm.
So your bookkeeper would know to capture things under the different EIN numbers. And if there are 25 bank accounts in one trust, which I've seen,
Mm-hmm.
you would want to know as a bookkeeper and as a trust owner, trust grantor, you would want to know what bank accounts belong to what entity as well. And that would make a huge difference in kind of creating the reports later on as well.
Mm-hmm. Okay. And I would assume it's possible to do both individual reports on each entity, but then also do a consolidated for the overall picture, right?
Yes. Yeah. There's accounting software that does I mean, QuickBooks does it. It allows you to be able to separate those things out. And that's what I really use to be completely honest. I really like the level of customization because the amount of detail I need to be able to pull out of these transactions is very high. So I do customize the different subcategories, the different like business and classes, all of that is accounted for and super detailed. Because then by the time I'm going to the reporting part of my work, I want most of the work to be done. So the hard work is done at the beginning. The end is just a click of a button and we have a report, and then those reports go off to the CPA, go off to you or whoever else needs to be seeing that. The charity that you might have as a beneficiary would need a copy as well, because then they know their own, portion of what what should be for them
Right, right.
as well, assigned to them.
Okay. And I'm sorry, refresh my memory on the third issue that you raised.
Oh, the third one was about I think it was about keeping track of the receipts.
Oh, okay,
Keeping track of
right.
the receipts. So there is software to be able to do that. And a lot of times I hear people are having their accounting done, but then their receipts are in limbo, right? They're in a shoebox, they're in a paper bag, they're somewhere in a folder. Mm-mm. Like, let's get away from that. There's so much technology now, and it's not expensive either. Um, to be able to snap a picture of something or have it auto forward from your email into that software for it to just be captured I think is super important as well, because otherwise the digging as a result of being now frazzled from a letter that you receive is not the best way to deal with things. Sometimes it's the only way, but if you can be proactive about it, that's something I do recommend.
So when you say receipts, are you talking about cash receipts? Are you talking about credit card receipts? Both? What is
Okay.
the scope of that? Because from my perspective, I look at my credit cards and, at the end of the month, or not the end of the month, but I mean, at the end of the billing period, right? I get a statement. It has all of all of my charges for the month. I,
Mm-hmm.
go into Quicken. I tell it to, update, right? It downloads all of them. And then I just did this yesterday, right? I go through them all and make sure that they're all properly, coded in terms of
Mm-hmm.
categorization. But where, and you're telling me, this is reminding me where that falls apart is in any kind of cash receipt. Now it's not getting into my books
It's
anywhere.
yeah. So you would probably have to enter those manually. Um, I know that there's regulation coming out regarding like like at what point do you start to report this? And I think it's the $600 rule with the IRS about reporting income or payments out from any particular entity. But with the receipts, do you attach the receipts to the transactions, or is it just you knowing where you spent it and then the categorization of it? But there's no attachment, right?
Well,
Or
right. So with my credit cards, I mean, like if you looked at my wastebasket, you would see all my credit card, receipt. Once I verify, the amount and that it came through, so then I throw the receipt away, and it's now in my
ah,
books, with the idea that if I ever had to prove an expense, I would, go back on the credit card's website and I can download, a copy of the receipt there. I mean, I guess I've
mm,
been lucky. I've never been
yeah.
audited. I've had clients, who were audited, and that I was doing work for in one shape or one form or another. But I haven't like copied my receipts and attached them to anything. Um,
Okay.
I don't know. Maybe should I
Mm.
be?
So there is something about what you're telling me. I guess now I'm understanding that different words mean one word might mean different things to different people.
Mhm.
So when I talk about a receipt, I talk about like a restaurant receipt, things like that.
Mhm.
What you're talking about to me means a bank statement, a credit card statement. And the statement will contain all the details of the transaction, but it won't, like, it's not the detail. It's not the whole detail. So the whole detail would be on the receipt, on the actual like restaurant style receipt. So it's an individual on an individual transaction basis.
Mhm. Okay.
So yeah,
And
it's
so those
mhm.
actually should be retained, is what you're saying.
Yes, I think
So
so.
what kind of actually we're coming up on our time here because we have
Oh,
some
we are okay
time
because I
here.
can't
So
see anything.
what kind of software do you recommend for dealing with those receipts?
So you can use any accounting software to be able to do that between QuickBooks, Zero, FreshBooks. You can use something called Dex. You can use HubDoc, I think it's called, things like that. Those all can support detailed record keeping
Mhm.
and receipt capture or receipt like attachment to the transaction.
Oh,
So
okay.
that would be helpful.
Yeah, I mean,
Hmm.
it particularly hits home in talk when you said restaurant receipts. Yeah, because they're going to want to see, you know, was there alcohol? What was the tip? Right? All of that. What was the tax?
Hmm.
All of that is part of, you know, an audit. It's funny. That's the things that you say that create memories. I remember um, one of my first jobs. I worked for a lawyer, and he got specifically audited on his entertainment expenses. And my
Yes,
mother
okay,
was
very
his
early.
bookkeeper at the time, and
Mhm.
I mean, it was just an enormous task. Now, this is going back a lot of years. This is going back more than 30 years ago, but it was an enormous task to put together the documentation to, sustain all these entertainment deductions. So, and that's when he started. I think that's when they started actually, keeping all the individual records. So this is before computers and all that kind of stuff. So but yeah, it can be a huge problem.
Mhm.
Wow, we're out of time already. It goes swiftly. And what I really appreciated is that you were willing to sort of get down into the weeds on this, because I think sometimes we stay a little bit too surface, and people really need to understand the details of this, and how important it is to put these systems in place from the beginning, so you're not having to go back and recreate. I know there's much more that you could teach us, so we'll have to have you back on again, and we'll talk about some of the other strategies that you've got to, make our lives easier when it comes to trust and estates. But Vonmarie, thank you so much for coming on the show today. It's always it's so much fun talking with you. I mean,
Thank you,
you
Thank
can
you
see
so
I'm blushing a
much.
little bit, you know.
It's so funny.
But before we sign off, I mean, kind of any we got a comment here. Okay, that yeah, she said very
Thank
very
you,
cool interview.
Dario.
So before we sign off, any questions? We've got a couple of folks joining us. Any quick questions for Vonmarie? We can go on for an extra few minutes. Before we sign off, if you have something you want to ask her. So yeah, hi Clarabelle.
Hello.
Hi there. I loved it. I just didn't want to take attention away from the highlighted folks. I was curious. I know that you went through the different platforms to be able to record the receipts, but I didn't get all of them. Would you mind repeating them?
Yeah, so I said FreshBooks, QuickBooks Zero with an X and at the beginning is Xero. Dex was another one. So I said Zero, Dex, QuickBooks, HubDoc was the other one. So that one is HUBDOC. That's another one.
Doc. Okay, Doc.
Perfect. Thank you so much.
You're welcome.
Excellent. Well, thanks, Clarabelle, for taking the time to clarify that. Appreciate it. So, kind of last thoughts before we sign off, Vonmarie.
Well, last thoughts. I'm really happy to talk to anyone and that has questions about this accounting process for their trust or newly formed trust, the implications. I'm happy to introduce you to anyone that might make a difference in your journey as well. But other than that, I can be found either on LinkedIn or my favorite platform right now is Instagram. I'm posting there. I just got back from a conference, FinCon, and there's pictures there about all the food and the dinner and the fun. But I also use it for informational purposes as well. So I keep the fun high and the education high as well. So you can find me at Vonmarie_breakaway_BA. So yeah, I'd love to chat otherwise. Thank you.
So I'll make sure that there are links to both your LinkedIn profile and your Instagram account in the show notes so that if folks want to get a hold of you, they can. But I'm glad you mentioned your Instagram because I did see your posts recently, and there was lots of great tips on how to deal with these various bookkeeping and accounting issues. So I am one of your newest followers.
Yeah, thank you, Kevin.
Every morning I check my feed. Well, again, Vonmarie, thank you very much for coming on the show. I so appreciate it. Clarabelle, Dario, also thanks for joining us live. It's always a treat to have folks with us in the meeting, and I appreciate you tuning in. And for all of you, out there in social media land, thank you very much for tuning in. We do appreciate it. Just real quickly, coming up tomorrow at 11 a.m. Pacific time is business lessons from the military, and we're going to be continuing our discussion of Marine Corps warfighting doctrine on intelligence. That's spy versus spy type intelligence, and how we can apply those concepts to our professional pursuits, to the business world. And then on Wednesday at 12:30 p.m. is People Making Money. And it's going to actually be a nice takeoff on today's discussion, Vonmarie, because I'm going to talk about sort of basics of financial reports. So we're going to talk about income and expense reports, balance sheet, so people have a sense of really what those are, because I think we may have heard those terms, but we're not really sure what's involved in these. And they're really the basis of any kind of financial or estate plan is being able to have, that picture that comes from those reports. So we're going to talk about that on Wednesday. And then, of course, 7 days from today at 10 a.m. Pacific time, we'll be back again for the next edition of Trusts and Estates Weekly. So what? Oh, cool. Great. So again, to everyone, thank you very much for joining us. Wishing you a wonderful rest of the day. Vonmarie, I'm going to ask you to hang on and don't click off. I'm going to go ahead and take us down in a second. But wishing you all a wonderful rest of the day, and signing off as I always do, recognizing my dear friend Marie up in heaven. You are and ever will be my belle. So take care and hope to see you again soon this week.